I'm here again with Mr. Steve Kinion. He's the Director of Captive Insurance in Delaware. Thank you for joining me again, Steve.
You're welcome, Tom.
And I know that you probably are, not probably, I'm sure you are the public sector regulatory expert in the sophisticated captive structures being used, particularly cell captives and series captives. You had mentioned to me earlier that while you only have 160 approximately licensed captives right now in Delaware, and you're experiencing rapid growth, you do have another 100 plus managed entities that are cells or series underneath those licensed captives. Is that correct?
That is correct. That is correct. Actually, to be more specific, we have 100, currently, as of year-end 2011, we had 150 captive insurance companies that we've licensed. Now, that number has grown since year-end to about, I can't give you a specific number, maybe about 153, 154 now. In terms of series business units, which you reference in terms of series captives, we have 169 series business units. And the series business unit is a quasi-entity of a special purpose captive that is generally formed as a limited liability company in Delaware. The Limited Liability Company Act in Delaware allows the LLC to form what are called series. Now, only about 8 states have legislation that allows series LLCs to be formed. Now, Delaware pioneered this practice back in the mid-90s. Now, we are the only domicile in the world currently that allows a series LLC structure to be used for risk-bearing entities, wherein the series of the series, or the LLC, is the risk-bearing entity, generally formed on an 831B type basis. I tend to call these captives on training wheels because it allows someone to enter the captive insurance market at a relatively low cost in comparison to forming a pure captive. Now, what gave what I call the series LLC concept legitimacy, maybe the good housekeeping seal of approval, is that in September of 2010, the Internal Revenue Service issued proposed regulations in respect to how series are to be taxed. And a series can obtain its individual taxpayer identification number and be treated as an individual taxpayer. Well, certainly when this occurred, it provided a great amount of fuel in respect to captives, for those captive managers who had specific clients who were interested, again, in coming into the captive world, maybe during tough economic times as we were experiencing in 2010 through 2011, and arguably well into today. It's a very cost-effective way to enter the captive insurance world, and sometimes, as I said a moment ago, captive on training wheels. If through 3 to 5 year period, a series will convert itself, become an ugly duckling into a beautiful swan by becoming a pure captive.
It's an interesting analogy. So these SBUs that you're seeing created, you do foresee a future for them where they'll start to take on more risk, they'll start to participate in increasing their self-insured retentions, their deductibles and the like on a lot of other lines of coverage, and probably no longer qualify as small insurance companies. So it could help small businesses be more competitive and grow.
Sure, I think
even though that might not be they might not understand that initially right now, all of these 150 participants or more.
They may not. They may not.
Yeah.
I mean, one of the mantras currently in the captive world, that growth is in the mid-market, however you define the mid-market. There's probably being 75 million in sales up to in the hundreds of millions, but certainly below 1 billion. I think it is a very cost-effective way for those types of employers to use captive insurance, either for coverages that are unavailable in the commercial market, or to fill in gaps in coverages that they have, or for deductibles. But yes, I do see a growth pattern currently for series business units and the series LLC market in Delaware. And we are certainly encouraging the use of these types of risk-bearing entities. And as I said, or as you alluded to a moment ago, once a series owner has been involved in captive insurance and they decide, I like captive insurance.
There's a big learning curve.
There is a learning curve.
I mean, I have discussions with some of these $50 billion a year revenue global corporations, and their risk managers are still learning how to use the captive more effectively to help different business units. And the same thing's going to happen with these smaller companies that you're introducing through your SBU program.
Yes, right, SBU. I haven't analogized it to SBA, but maybe I should.
But don't ask me where that connection came.
But in truth, though, it does allow a mid-sized insurance company owner, or excuse me, mid-sized employer, not insurance company, a mid-sized company owner to utilize the benefits of captive insurance in a means that they can make a determination. Is captive insurance a good idea for me? Is it a good idea for my company? And if they decide it is a good idea, I can then graduate from a series risk-bearing entity into a pure
Off
captive.
into their own pure captive.
Absolutely.
Yeah. You expect to see some of that this year, or might it take a 2 or 3 year incubation period for companies to mature that much?
Well, we're seeing some of it already, to a small degree, but certainly
That's an exciting trend.
I think it is an exciting trend. I think, again, as you mentioned a moment ago, Tom, it allows an easy entry into the captive insurance world, something maybe on a trial basis. As I said earlier, I tend to view Series as captives on training wheels, and at some point when that captive owner is ready to take the training wheels off and ride on their own, so to speak, well, they have an easy avenue to do that.
So what are you doing as a domicile to address the costs associated with managing the series? I know you make it very easy to enter. The cost of entry is low. No additional required capital, low fees, just small premium tax.
A Series entity in and of itself, or a Series risk-bearing unit, is not subject to the minimum $5,000 premium tax, which is the minimum amount each captive, defined captive, pays in Delaware. So that's, again, up front is a $5,000 savings. Now, they are subject to premium tax on an aggregate basis in respect to the LLC, with these various series beneath it.
But it's
aggregate
still only
the tax.
1.2%, correct?
Yes. Well, 0.02%, yes.
0.02. They're very small. But also, it's not required to, it doesn't have to meet the pure captive capital requirements again.
No.
These new SBUs just come in right underneath the core capital of the sponsoring unit.
Now, it does not have to meet the $250,000 minimum capital and surplus requirement. Now, the trade-off to that, though, Tom, is this. We do limit the type of risk that a series business unit can write. I mean, if you are a pure captive with $250,000 of capital and surplus, there's a greater range of risk that you can write, more third-party liability risk. In a series business unit, we tend to restrict that risk to simply just what I call enterprise risk management.
As well as the limits they can write?
Yes, exactly.
Okay, makes sense.
Because there are lower capital requirements, and that's the trade-off, though.
Okay. All right.
We are regulators, and we do regulate.
Yes, of course. All right. Thank you very much, Steve, and we appreciate you sharing your expertise in these sophisticated areas that are not well known yet today.
Well, you're welcome, Tom, and thanks for the opportunity to allow me to discuss captive insurance in Delaware.
I look forward to talking to you again. Bye.